Thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we'll do the same without wasting a single second of your time. Bada bing, bada boom, we go into the charts. So it looks like we got a little bit of a push up over the weekend and hit the point of control of this previous range and the 786 of this impulse to the downside. Do we get another rejection off of that 786 level? We will see. Let's go into the liquidity. First, let's go see how it fared from our projection yesterday, shall we? Let's go into what would have kept you thinking about this. So first and foremost, you had this bullish trend-based fib level at 30,180. It looks like we got a second rejection off of that point, but just after the live, we did get a rejection off that 236, came down into the liquidity pool ever so slightly. If we actually, we'll come back to that in a moment, but first and foremost, let's go to high block capital. What is high block, you say? Well, people lock their liquidity into the charts to get burnt to a crisp by the market maker for not using a stop loss. And we get to see where those crispy characters lie in wait and or get burnt to a crisp. So let's do that now. Going into the 1 minute time frame. If it would load for me, please. Let's go ahead, and while that's loading, we will load the chat to see who is afoot in watching us. All right. So basically yesterday we were talking about these pools down below at 137 million, down at the 50x level down here at 29,727. We said watch out for that. If we cannot maintain that 236 level, I think we could do that while we coincide here. So before we even throw on Momentum Master, we'll just look at what happened. So we were talking about this 236 level. He said if we can't have candles with conviction above this level, you'd think we drew this after the fact, but we were back here. We said if we cannot get above this 236 level, then you can expect a hit to these pools down below. They didn't hit it immediately, which is strange. So they left the 50x 137 million alone, spiked up to take out some of these 100x shorts, and then dropped it like a rock down to that region and took out those $137 million in 50x players.
Fatality.
Meanwhile, inducing some shorts to the tune of 171, and so that's why we've been drifting back up into these $171 million short pools that were induced at that level. So they came up to that and then dropped it down, and then now we're coming back to this level yet again. Let's go ahead and reassess this. I think that's good, so we can delete that for now. This pool was taken out, so we can say goodbye to that gentleman, and we will come back to our assessment for the weekly in a moment. So let's first go back to the higher time frame pools. First, on the 1 minute time frame, you have $8.9 billion imbalance to the longs down below. We outlined the pools where they would be interested to clear this range at 29,015. You see this thick layer to the right here. This level of liquidity is all stacked with, this is how rounded tops induce. They hook the longs and don't allow them back to their entry and then go snag them. That's how rounded bottoms form too. They do that with the shorts. They pull them up above and then stab them. So if they're going to be pulling the longs, they would create that rounded top inducement and not allow them back to their entry and then stab them. So they have 8.9 billion on the 1 minute time frame. This is 7 days of information. The rest get lost to father time. So we have to expand our vision to the higher time frame pools. These higher time frame pools are on the 7 day. Starting with the 7 day, we have to turn the max liquidity on here. I don't know why it always switches to relative. So anyway, on the 7 day, you have a larger range of liquidity down below, but the thickest region is up above at 30,100 or 30,950, 31,000 even almost. Got about a $10 billion block of liquidity forming up there. at the top of the range, but overall the imbalance is to the downside on the 7-day. Same thing occurs when you look at the 1 month. The 1 month has the thick stack down below at 26.4, and below you have about $70 billion down in this region, and less up above on the monthly. Here's where the internal versus external liquidity starts to come into play as you start to shift to the higher time frames. The 3 month also has that thick band down below at 23.4, but you're starting to also get these 40 billion, 50 billion pools that outweigh that 26K region on the monthly. When you start to expand to the 6 month as well, you start to see that band starts to get thicker, and you have 146 billion at 32.1. If this is their market objective, I'm not sure, but there is still larger imbalance down to the downside on the 6 month. When you expand to the furthest time frame at the 2 year, this is where you start to see the interest possibly be generated up to 33.2, because you have $600 billion, 220 billion at 33.2, 220 billion at 32.8, and 226 billion at 32.4, totaling to $660 billion up above to 33.2. If we were to stab up to this region, I would not be surprised. We are a hop, skip, and a jump away at this point. Previously, we did do that to this band down below. We had $241 billion at 24.4, and we spiked down into it. I was wholly surprised that we did not come get this 248 billion at 23.6, so they might, for whatever reason, leave some protected positions alone up in this region. But coming into this range now does not seem like an impossibility. So that is what we are looking at in terms of the liquidity on the 2 year, the external range up here. These shorts that are positioned quite nicely might be on the chopping block. Coming back to the monthly, and then we'll go back into our charts. So this little band, if it were to drop, it would be likely come down to this region quickly, like a Bart Simpson, because there's nothing really interesting in this area after previously liquidating all of that range. So the next range of interest would be at the 26.4 region and below. But meanwhile, if they're on their path to the upside, they will take out the 1 minute pools, which is why we also look at these pools too, because these 25xers, these 201 million at 25x and these 206 million at 50x they get fatigued of paying these guys, so they come back and retrace into them on their continuation to the upside if they were going to continue. So let's go ahead and throw on the momentum at this time and take a look at how things are faring on the momentum. Link in the description for more momentummaster.info. You can scroll down to the features, toggle all of the components at Bitcoin's bottom before we knew it was a bottom back in November. And we had the rocket ships on the stochastic array, the trend cloud shift, and the baselines. This schematic is what you see over and over again. It's what we saw in the most recent rocket ship that played out down here. So we were talking about that rocket ship appearing down in this region, and this schematic is something that we see over and over again. If we go back to here, most likely you'll think that schematic is from this price action. So if you look at this and look at this, it's pretty much the same thing. And this is what you look at. The 6 time frames oversold. There was a rocket ship that flashed here, and sure enough, when a lot of YouTubers were calling for shorts here, we were seeing the long idea play out, and boom. And that is how it works. So let's stop tooting our own horn and just go how the liquidity was looking. We're seeing this fatigue potential of this last live stream, and it got a little bit of a beef injection to the upside. The 2 o'clock angle still holding on the hourly. So this super trend has had you at hello every single time. We've been talking about this super trend the last few days and how it has been a key level to watch. We had this back here, and now we have it again, the super trend holding on the hourly. And the super trend is one of those things back tested to be true. So we're going to take a descent through the time frames to see where we stand on the weekly and the daily and all that fun stuff. Okay, so on this impulse retrace to the downside, this AB wave, we're seeing a stab up to this one level at the 30,180. We went slightly above it. Why did we go above it? Well, if you take an impulse, a retracement down to these levels here and take it all the way to the bottom, then this is your 786 level, 30,329. Are we getting a rejection at this 786 level after clearing all this liquidity out, flushing the liquidity of the shorts? We already talked about where the possibilities lie on the higher time frame. So if they're targeting the external liquidity of the 2-year, we have all of these to possibly go even higher. If you look at the daily time frame, we are getting overbought. The Williams does have room to drift higher. It could drift higher in this ascending channel manner. We were talking about this ascending channel style of drift on the Williams that could occur as the average comes up to it, similar to what happened back in June. So we could be meandering around in this range, attempting to induce shorts and use that liquidity to drift up to the external target in the 33.2 range. So I wouldn't be too quick to short it just yet. Always with a good play, it's going to take time to develop with 2 or 3 hits to that region. Here you had on the daily that bullish divergence on the RSI as well that played out, boom, to the upside. We had a rocket ship down here back in September, continuation rocket over here. All right, so let's go look at the 3-day real quick and say what's up to everyone in here. What's up, everyone? How you doing? Okay, so 3-day time frame, we saw this potential fatigue off the cloud and caught that A retrace down to the B. We held the baseline cross up on the 3-day. The 3-day was scooping up the price in a nice manner here. We said we needed to close candles with conviction above the cloud. We did, and so now we're getting that push up for that double top effect. The Williams Rising Sun event playing out, and we're getting that drift to the upside. If we go to the 22-hour time frame, the 22 also getting the Williams average drift possibly coming here with that ascending channel action. Starting to fail the first baseline here, potentially speaking. And if we go to the 12-hour time frame, 12-hour money flow still beneath the RSI could get another stab to the upside based off of that disparity. The disparity when the money flow is beneath the RSI tends to get that injection to bring the money flow up to the RSI, not the converse. There are instances where the RSI comes down to the money flow, but generally when you get that money flow above the RSI like you did up here, then dump. And conversely, when you get the money flow, you had another instance here. This is an instance where the opposite came true, where the RSI came up to the money flow. But for the most part, you see that money flow beneath the RSI, and then the money flow comes up to the RSI. So we could get another injection of dinero into that idea. Oops. So we already know that that's a 786 region, so I don't need to have that there right now. Okay, so if we go to the 6-hour time frame, rather, we haven't looked at the 8-hour in some time, so let's look at the 8 real quick. Sometimes the 8 gives us a clearer channel. We're already getting that drift level up here. Could come to a point where the alarms appear. Getting some bearish divergence, the money flow and the RSI tight together. The MACD about to cross on the 8 hour cross down event is flashing. If that closes in the next 25 minutes, that could be an insinuation of that reversal idea. The last time we had that on the 8 hour for the cross up, it was the upside play. So these are your first sign of reversal, the baselines. So what are the baselines saying here on the 8 hour? That you're potentially fatiguing out, at least for the time being. The 12 hour still thick in a manner here. Let's go to the 6. 6 already crossed down and locked in. So that 6 cross down event, you did lock it in here, and then you had a little false flag on that. So do we have this kiss back to the cloud region, recovery of these vectors? These vectors are potentially edible in terms of liquidity down below at 28,534, $206 million down there. So coming down to that 28,534 region we marked off here, would make sense to come reclaim those vectors at some point, come back and kiss the cloud. We have yet to kiss it on the 6 hour. What do we mean by kiss the cloud? Well, we pass through the cloud without saying hello, and generally you like to come back and kiss it for confirmation. These are your order block ideas. We also have an order block finder inside of Momentum Master BA rather. You could look at it on different time frames. It will take the consolidation and all that stuff and the wicks from the previous candle before the drops in mind. If you know how to find it, you don't need it, but it's there for you anyway. Okay, so if you go to the 4 hour time frame, let's go ahead and see that. The 4 hour also crossing down and getting that price suppression of the baselines, however slight. The cloud on the 4 hour happens to be at this super trend / liquidity zone, this confluence lining up for the 29K region perhaps. Just delete that. That is where the super trend bounce on the hourly occurred. If you're looking at this, the stochastic has reset nicely in a manner here on the 4 hour while we drifted up, as they forget their candles to father time. Each time they create a new candle, they forget the look back of the previous one. That's how it works. I used to previously think it was something to do with liquidity, but it does not have anything to do with it. It has to do with the math of the look back, and the look back is generally set to a default of 14 or 13, so it's looking back 14 or 13 candles and forgetting the green ones. So if we have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, it has forgotten these green candles in its calculation, which has reset. And then by resetting that, it established that it likes this new range over time, so it resets this. And that gives that bullish insinuation. If you maintain the range while setting this back, then it shows that they're not ready to go back to the vectors just yet. I'd still look out for it either way. You're at the premium level for the long. You should be monitoring longs at this point if you're still in them. Now, if we go to the hourly time frame, the hourly got that little Asia push up here above the cloud after previously failing the cloud and holding this super trend for the time since way back when. This super trend has been held since Saturday, October 14th. So at the bottom of the move, this super trend has been on the hourly, has been very, very good as a back testable level. And we're getting that cross up here, trying to maintain this cloud again, coming back above, eating that liquidity. We still have that $171 million at 30,139 to come back to if they were so inclined. 131 would put you up here. So there is that little 50x pool inside of this that they could come back to. 139, sorry. We'll just have it at 40. So inside this short candle here is some 50x player that they're possibly trying to remove. 50x pool rather, it's multiple players. So watch for the Asia fade. It is false move Monday, so they're trying to create this strong weekly close by the look of it. If we look at the weekly, this weekly close, trying to put in a higher high on the weekly, so I would expect the weekly close to close strong, and then after that point you could get the fade slightly into eat up some of that liquidity. If you'd get a retracement, if it's sustainable, a retracement should be in order at least into some of these pools down below. Some of these vectors would make sense. So currently you got that 4-hour reset. The 4 hour is now on your side for potential upside on the stochastic. But if you look at it on the Williams side of things, the Williams are a little bit cooked. So getting a triple top, even if this does play out, does it play out fully? Does it get to that 50 level and fade with the Williams as well? You're kind of spent on the Williams end of things. A stochastic pop, and whatever you want to call it. So you got this vector candle that they brought in to take it up a little bit here onto the shorts, reclaiming the cloud. The angle is insinuating still that curvature of that fade. Overall, kind of giving you that vibe of potentially fading at some point. Similar to here, we were talking about this curvature, I remember, before the move played out. So the insinuation of the change and shift in momentum is something to look at. Once again, there are 3 pillars to trading. You have the liquidity, the math, and the momentum. This is how we expound our analysis each time. We start with the liquidity, we go into the Fibonacci and the math, and then we go into the momentum to look at fatigue points in the momentum. All of the formulas within here are leading in nature, so they are giving you that insinuation before it even knows it is happening. Okay, 15 minute reclaiming the cloud here, possibly coming up. I would look for that 30,140 region. It looks like this. You've gotten a hit here, you've gotten a hit here, you've gotten a hit here. Do you get one more hit? Watch for that range up to fade. This is your one level of the bullish trend base fib nature at 30,180. Do you start to see a fade at this region? If we take an impulse retrace down to here, yeah, that is the 786 region up here that we wicked up into. Okay, so let's go into the dominance that we were looking at before. Dominance dropped off as we allowed for some alts to play by the looks of it, and the USTD dominance is dropping as more people invest into some trades, position into some alts by the looks of things. The dominance dropping with the USDD dominance dropping means alts are getting a little bit of a burst. If we go to total 3, it is going up. So if we go to cryptobubbles.net, you can see green across the board, a lot of Link going up, Hex, Aave, Apt, Gala, a bunch of these having some decent daily and the hourly as well. This is the quickest way to see how they are doing. So the alt's getting a little bit of a rally here, getting fatigued though. Possible retrace on them at some point. Dollar coming back into a pocket here, perhaps. And the NASDAQ starting with a little bit of a gap up. I'd look for a double bottom event or some test of the lows one more time, perhaps. Similar to Bitcoin testing the highs. I've noticed that a lot of times the NQ and Bitcoin kind of work inversely, the indices and store value assets. I've watched many times where NQ's dumping and Bitcoin's pumping, and NQ's pumping as Bitcoin's dumping. So you have this like nuke up here as Bitcoin was having a rocket ship, for example. And these nukes play out on other assets too. You can see the nuke, the nuke, the nuke. So if you play stock markets, it's very interesting to notice these things do play out across the board. So I would look for this fourth hit here up at the one region. Do we get one more hit up here to this liquidity pool of these 50xers, this $171 million 50x, and do the usual Asia fade effect, where they fade into London. So the Asian range should be opening soon. Asia rarely pumps it, so if they pump it similar to here, if they pump it up pre-Asia and then they fade it into London. So if they pump it up to here and then fade it into London, I would not be surprised if we made it up to here and then start to fade a little bit down and then possibly come down a little bit more. So that's my story, and I'm sticking to it, folks. Let's go see if you have anything worth chatting about. So I guess not. So thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we'll do the same. Bring in the fire, the accuracy, the precision, all that fun stuff, and we'll catch you on